Our next guest says the recent government shutdown drama narrows the scope for the type of legislation needed to maintain high economic growth and genuine financial stability. Joining us to talk about this in a big week of economic data, culminating with Friday's jobs report, Mohamed El-Erian, Chief Economic Advisor at Allianz and President of Queen's College, Cambridge. Like entitlement reform, Mohamed, or more Keynesian programs? What is it precluding, the gridlock in Washington?
It's precluding a laser-like focus on the supply side, on getting the supply side to be more flexible, Joe, and getting the supply side to continue to embrace very important innovations in technology, in life sciences, and in the energy transition. So this is a time when you need the supply side to be more flexible. That is our problem right now, is that we have an inflexible supply side. And we don't get there without government facilitating that transition.
How? I mean, I can see how the government can muck things up in terms of what you just mentioned. The industries that you said need to be, I don't know, more nimble. But doesn't the market force that? Isn't it in the best interest of the private sector to do all the things you just mentioned? What do they need the government for?
So we have a detailed analysis in a book that was published, co-authored with Mike Spence, who often is on CNBC, and Gordon Brown. Look, there are government failures and there are market failures. And when the two come together, then externalities do not get priced into the system. So markets do not function as well. Look at our supply chains as an example for that. You need cooperative solutions to common problems. So yes, there's a lot that the private sector is doing and will continue doing, but there's also a lot of what the public sector needs to do. And it's not just government. I think the Fed has a role to play in this in terms of its monetary framework and inflation target. It extends beyond. We have to embrace the notion, which we haven't done yet sufficiently, that we're no longer in a world where it's insufficient demand and you can just throw money at it. That's the old world. The new world is inflexible supply, and you've got to work hard to fix it.
Would you at least concede that the converse is true and that overregulation and red tape, permitting some of these projects, all these things that the government is trying to get involved as you want it to get even more involved, and as a result, the private sector and you called it the private sector failures and government failures. Most of the private sector failures probably come, or at least are informed by the government getting involved. No?
Look, Joe, there's undoubtedly government failures, what economists call overreach by the government. Yes, undoubtedly. But having said that, the private sector itself fails by not pricing in. Look, the global financial crisis, that was fabricated in the private sector. You can't blame that on overregulation. The lack of resilience in the supply chains, that was fabricated in a private sector that overdid efficiency and underdid resilience. So yes, both fail, and the argument is there is a middle way. And I always point to the vaccine, Joe, as a perfect example where the private sector and the public sector came together and did what they do well. The public sector only limited itself to taking out catastrophic risk in a risk tranching mindset. And then the private sector came in and did what it does very well, which is innovate. Once you take catastrophic risk out of the way, then your risk-return equation looks different and the incentive to innovate goes up. And there's a lot of scope for that. But the important thing is to recognize, and it's not just the government, it's the Fed as well, to recognize that we are living in a different economic paradigm.
I certainly understand the Fed, but so what type of bipartisan legislation would you like to see that would address the supply chain issues?
So infrastructure becomes really important, and that has to be done in partnership. The government cannot afford. You know, the one thing that we haven't talked enough about is what these higher interest rates are doing to the government budget. The scope for government spending, other than on interest rates, is coming down day by day. So you're going to be forced to look more sort of imaginatively at these partnerships. So you have that. Regulation, you're absolutely right. We have to be very clear on what regulation is trying to do and not trying to do. There's a whole, as I said, we've spent 2 years thinking about this with Michael Spence and Gordon Brown. There's a whole list of such actions that we believe are feasible. And if we don't do it, Joe, things are going to get worse. This notion of cascading crises or perma-crises, where we seem to go from one crisis to another, that is in a significant way eroding not just our financial resilience, but our human resilience and our institutional resilience.